Hello and welcome to this ICAEW webinar, Mastering Funding Advisory, a blueprint for accountants in association with Swoop. My name is Ros Harrington. I'm Senior Practice Manager here at the ICAEW, and I'll be facilitating the session today. We very much encourage you to get involved with today's webinar. You can start by answering our poll on the screen at the moment, just gauging how you are currently offering funding relating services to your clients. You can submit your questions to us any time today by typing your questions into the Q&A widget. We've allowed for time at the end, so please do keep them coming in. Please also note that closed captioning is enabled for the webinar. To turn this feature on, please click the CC icon on your screen. Please note these are automatically generated and errors do sometimes occur. I'm now delighted to introduce and hand over to our speakers for today, Sam Tasker-Grindley, who's head of Swoop for Advisors, and Georgie Rowlings, founder and co-CEO of Starfish Accounting. Hello, both.
Hi, Ros. God, you're slick at that, aren't you?
I am.
Thank you for having me. Are you happy for me to take over? Cool. Thank you, everyone, for joining us. Really looking forward to taking you through Mastering Funding Advisory, and absolutely delighted to be joined by the absolute rock star, zero hero, that is Georgie Rowlings. How are you, Georgie?
I'm very well, thank you, Sam. How are you?
I'm very good. Would you like to just do a little bit of an intro into who you are, what you do, why you're here, I suppose?
Sure. So I'm Georgie Rowlings. I'm one of two co-CEOs at Starfish Accounting. We've been around since 2011, so 13 years this year. And we're a cloud accounting practice, 100% zero. Like to think that we are towards the front of the curve when new stuff comes in, and funding advisory forms part of one of the things that we feel is expected from a more forward-thinking accounting firm. So I guess that's why I'm here. And my background, I've got a bit of a blend as well as Starfish. I spent 6 years at Deloitte, half in the UK, half in sunny California. The sun is shining today, so not in California. And I spent a few years working in industry as well. So I've seen things from both sides of the fence.
Excellent. I will dig a bit deeper into that in a little minutes, but thank you for your intro. Just quick one to me as well. So I'm Sam, head of Swoop for Advisors. So I've been with Swoop for about 2.5 years and set up the channel, working with accountants to help them to provide access to finance, or make it easier for their clients to get access to finance across a whole suite of products, including grants, loans, equity, and a lot of different savings products, most of which I will go into at some point later today. And I'm also still very involved with the ICAEW myself. I'm chair of Western North Yorkshire ICAEW region. So that's enough about us. Let's get straight into the webinar. These are, if it lets me change, these are the first topic we're going to talk about is how you might get started introducing funding advisory services, Georgie. But before we go into funding specifically, just wanted to ask you a question as a digital practice, and one that's been pretty much born out of a digital practice. How do you normally go about launching a new service or embedding a new piece of software into your practice? So that's the first question. Second part of the question, did you find Swoop or launching funding advisory services any different to the other ones that you've done in the past?
Second part of the question is easier to answer than the first, because I think the answer to that is yes. So when we've taken on a new bit of software, for example, we've experimented with different software products for making payments for our clients. What we prefer to do where we can is use it ourselves first. So when we're then rolling it out to clients, we can talk to it with a degree of experience and understanding. So we'll often trial 2 or 3 different options, pick the one that feels to us so it's the most user-friendly for our clients, and then roll it out from there. And we will sometimes be more blatant about it than others. So depending on what the software is, if it's something we think would benefit a lot of our clients and we want to try and prompt some interest from it, then that might form part of our content marketing. So we're quite active with blogs, social media, that sort of thing. Not so much with video, but anyway. Or if we think it's something that's only going to benefit sort of certain niches within our business, then we'll go to those clients directly. It might form part of a quarterly update, it might form part of the next time we sit and have lunch, we might send emails, whatever it might be. Swoop, I think, was a bit different because it feels like access to funding is quite an emotive topic for clients, and I think it needs to be handled a bit more sensitively than just rolling out a bit of software. I think every business owner where we've talked to them about access to funding views it in a different way, and it feels to me like that is something that's really, you need to have the relationship for it to be effective, because you need to be trusted that you know what you're talking about in this space. So it's handled much more on a case by case basis for us.
Interesting, great answer. And with when you first got involved with Swoop and doing funding as a new service, was it something that was completely new to you when you got going, or did clients in the past come to you to ask you about funding options, funding requirements, or was it something that never really got asked and this was just a sort of a whole new world for you?
When we first found you guys, it was actually prompted by a relationship with a particular client where I knew that they were going to be asking us for quite well-rounded advice on what their different funding options were. So it's not just, can you get a loan from the bank? They've got significant assets. So can they have asset financing on existing assets? They want to buy more assets. Can they have asset financing on those? They've got accounts receivable. You know, the various different things that the funding could be tied to. And we knew a little bit, but not enough to feel like we could really give them what they needed. So we were looking for a funding partner at the time, and really loved the sound of what you guys do. We have had other clients in the past where we might have had a conversation where it became apparent that funding was needed. And we do have long-standing relationships with a couple of people who provide very specific types of financing. So we might have referred somebody on as part of that relationship, but we've never pre-Swoop, we've never sort of looked for those conversations. We've only ever done it on a very reactive basis.
Yeah, I think this is a very broad question, like how to introduce funding advisory, because there'll be lots of people here, and that's part of the reason why we started with that poll as to is it something you've done before? Is it something you're thinking about doing? Because people potentially will be coming into the space completely green, and it might be a pretty scary thing to start to talk about. In which case, we're starting a little bit earlier in the journey. There's a lot more education perhaps needed for both the accounting firm, but also for the clients, up to those that have been fairly frequently asked about funding in its various different guises in the past, in which case we're starting there at a different place in that relationship with them. They don't necessarily need quite so much hand-holding, they just need to know they've got that trusted solution behind them, potentially. So yeah, I'd say there's no one way of kickstarting with funding within your accounting firm, because every accounting firm is different. One question I just wanted to ask you about, and this sort of goes back to how you've launched those other services. The way I think, generally speaking, when you're launching a new service or a new app within an accounting firm, if you want it not just to stick with you, i.e. the business owner, because that can happen quite easily, and then you become the bottleneck for real progress. The sort of structure that I think works quite well is you have a project sponsor, which probably is you. So the business owner or the principal or a director, whatever you might call it, who is very much bought into the app, the service, etc. They know that it's something they want to be driven through the business, but because they are so busy and they're doing lots of other things and maybe bringing in other initiatives, they're not necessarily the one that are going to be driving it on a day-to-day basis. So yes, you need that sponsorship of it up front, but actually you need a project leader within the business as well, who's going to be the one that's ultimately responsible and accountable for making progress and making things happen. Now, if you're a smaller accounting firm, the project sponsor and the project champion might be the same person. For a larger accounting firm, I would probably recommend that it's a different person. And then after that, the rest of the team at least needs to have an awareness of the new app, the new service. They don't necessarily have to be the ones that are using the platform. They don't have to be super users, but they at least have to have that awareness of the opportunity and what you can do. Is that, I might have just answered your question, is that typically how you would approach it in in your practice, or would you have a slightly different view on that?
I think we're probably a little bit less organised about it than that. We do try and encourage the team to actively participate in training. So one of the things that I really liked when we first started looking at Swoop was the availability of the training on the platform. I worked through a chunk of that, and it helped me to get more familiar with different terms and what have you, so if I was asked questions, I wasn't just drawing a blank because I'd never heard of it before. And I think where we've had really good traction when rolling out software before, it's where there is a good availability of training. So using the really obvious example of Xero, everybody in the team, with the exception of one of the admin staff, the other one's done it actually, everybody in the team has to do the Xero certification. It's the first thing that they do when they come and join us. And if they've already got that, they need to bring it over and demonstrate they're still up to date. Another one that we use extensively is Dex Prepare, and again, everybody has to go through certain basic training on that to make sure that they know what they're doing. So where we bring in an app and there's good training available, then we'll encourage the team to complete the certification and share those stories amongst the team as well. So we have a training channel in our Slack where people will post where they've completed a good bit of training, and it sort of encourages everybody to do the same. But I don't think we've historically gone down that project sponsor, project champion. I think because we were too small to do that in the past, maybe. But as we get bigger, I think that's probably something we should look to do, because otherwise, as you say, if it's just me doing it, then I can be a terrible bottleneck. Same for my business partner.
Yes, yeah, I think the education piece is really important. I think the majority, certainly when I was in practice, the apps and the software and the service lines that we had most success with in launching were because the partners that we chose to partner with had the best education program or support or ongoing support. So, you know, at Swoop, we're really passionate about the customer success side of thing. I've always wanted to grow a success-led offering, i.e. not just selling the dream at the front end and then leaving you to it to go and find your own way, but making sure that we're there every step of the way with you, helping you to embed it into your process and all those sorts of things. And education's part of that. The education, so we've got a CPD accredited education platform. That is one way of being educated, and it is a great way. It gives everyone a good general awareness. But sometimes it can be misused. So some people just race to the end, so they get their certificate and say they've done it, and actually they've not necessarily able to apply what they've learned because they've just rushed through it. I did exactly the same when I did my accounting exams. I was a very good crammer, and I was very good at passing exams, but it doesn't mean I actually knew what I was talking about because I just learned to pass an exam. I didn't learn to, so it can be similar. The best way to learn is to do. I think it's the same with being an accountant, and you just learn through experience. So getting yourself involved and starting to have the conversations, in my opinion, is actually the best way to learn. And the education platform side of things is just giving you that general awareness, a bit more confidence. You'll pick up a few different bits here and there so that you can actually get started. Would you agree with that?
Yeah, absolutely. Spot on.
Cool. So there's a few ways that Swoop help accounting firms and bookkeepers that we partner with to introduce the funding advisory as a service. So Georgie, you mentioned some of the ones that you do internally. And you go through your own processes, and then these are some of the ways that we support you as well. So depending, and I'm going to go in this, I've included a bit of a funding playbook at the end, which I'll send, and that's the blueprint, which was the title of this webinar. But one of them is looking at how you guys have your meetings. So lots of accounting firms run in lots of different ways. Some are still having annual relationships with their clients. That's fine, that's their prerogative. Some have a pre-year end as well as a year-end meeting. Some have quarterly meetings, some have monthly meetings, and some have more often probably. In the majority of those cases, I imagine there is an agenda to those meetings with a checklist, and there's probably a few questions you could be asking your clients at that point to get in a bit deeper as to what are their growth plans, are they buying anything, are they looking to hire, are they looking to buy some more stock, whatever it might be. There are some fairly simple questions that could be asked in those meetings that could start to uncover some more opportunities to talk about finance or grants or savings or something like that. So that's one of the things that we work really closely with our firms with, is not necessarily getting you to create new processes, but to embed them into the existing ones you've got already. So we know that you're all busy. We know that you're firefighting, most of you in your practices, and being pulled from pillar to post. Where on earth are you going to fit in time to do another service? And that's why we're really keen to work closely with you, so we can help you to embed it into your processes. Another way of doing it is to segment your clients into various different sections. So you might do it by turnover, you might do it by borrowers and non-borrowers, which is always quite a good way to segment. So if they've borrowed in the past, they may well be quite likely to borrow again, just because they might have that mindset for growth, or for they might have that sort of business that burns through cash, or is fairly seasonal, whatever it might be. But also gives you the opportunity to look at their existing debt facilities in place and see if Swoop can improve on those facilities. So we're always looking for those opportunities to save your clients money, and we always want to put you guys at the front and center of that, so that you guys can take all the credit and look like absolute rock stars in front of your clients. Georgie, I was going to touch on sharing great content with clients. You talked about the importance of communication when you're launching a new service or a new app. There's no point in signing up to a new app and then just leaving it there and no one knowing about it, is there?
Absolutely. Yeah.
So what sorts of things how do you generally go and communicate a new service offering or product with your clients?
So it depends, is the short answer. We will quite often, if it's something that we're looking to communicate across a broad spectrum, then we'll quite often have a blog and some associated social media posts. So we might run a social media campaign where we will run through something and refer back to it in a different way every few weeks, every couple of months. We do send out email newsletters to clients. We don't do it very often, but we do it probably every couple of months. So we might highlight something in there. Or like you say, when you've got an existing meeting arranged with a client, it might simply be a case of making sure that it's included on the agenda and discussed with that client at the time. When we look at the way that we've marketed funding advisory, we've been relatively low key on the website, but we will talk about things that feed into it. So for example, we did a blog on improving your credit score as a business. And that's quite an easy in with clients. Do you know what your credit score is? What are your plans? Are you going to need to expand at some point? Are you going to need some form of borrowing? If that's what you're looking at doing, we can help you improve your credit score. So it could be something as simple as that. It doesn't need to be a big fanfare, but it's looking at ways to communicate with clients that don't come across as kind of too salesy and too threatening.
Yeah, I like that. Great approach. And then we've touched on education, so we can support with the education for you guys internally. So within your practice, we do some face-to-face training. We do plenty of online training as well, and masterclasses, etc. in the different sections. So just wanted to show this just because if you are to ever partner with Swoop, anyone who's listening, we don't just partner with you and leave you alone. We're with you every step of the way to actually be able to roll this out with some level of confidence. I just wanted to touch quickly on, I'm not sure where this fits in my slides, but I'm just going to touch on it anyway, on why it is so important that, in my opinion, and backed up by stats, that accountants and bookkeepers are supporting their clients with access to finance and all of these other bits that Swoop do. Statistically, a client, a business is 4 times more likely to be successful in their funding application if they've got an accountant as part of that application or working on it with them. The reason for that is the integrity of the data that normally is there with alongside the funding application, the speed of getting the documentation together, because generally speaking, you guys have it at your fingertips, and also because, and it's the cliche, but you guys are that that trusted advisor, so you're able to be that sounding board for your clients and talk them through without giving advice, because that's not what it's about. You're not supposed to be giving them advice necessarily about which offer to take and when to take it and all those sorts of things, but you're objectively giving them confidence that they should be taking something or they shouldn't be taking something. And we find having you guys involved in that conversation makes it a lot easier for the client to get that access to finance. So I think it's one of those things where the accountants completely undervalue their role in supporting their clients with access to finance. I don't know if you've felt like that in the past, Georgie, where you felt like you're not really adding much to the application or to the conversation, but well, you tell me. Have you ever felt like that?
Certainly a couple of years ago. Yes, I think I felt it wasn't my place. And that was something that was the province of the business owner. And it's been fascinating, some of the conversations we've had since we've been involved with Swoop. What I hadn't realized before we started initiating the conversations is how much angst business owners are carrying. I think particularly at the moment, we've come off the back of such a hard few years with Brexit, which everybody's forgotten about, and COVID, which we're all trying to block out. Now we're in the cost of living crisis, and people are struggling more and more to get their invoices paid on time. People are challenging them on their prices. It's a really tough environment. And owning a business is a super lonely place to be. You don't have anybody who's in your corner. You can't necessarily talk to your spouse about it because you don't want to panic them. You can't talk to your team about it because you would panic them. You can't talk about it with other business owners because you're trying to portray that things are better than they are. And I'm sure everybody listening will know what it's like as an accountant, that you kind of function as a counselor as much as an accountant with certain clients. And I think for them, knowing that actually not only can we sympathize about it being hard, but we can help them to map a way through it. And we can help them to provide the information that's been requested by the potential loan provider, whatever it is, that we understand what's being asked for. We can help them to look at even things like affordability and, are they going to manage to cope with these loan repayments, and how does that factor into their cash flow planning when they might not even know what cash flow planning actually means. Yeah. It makes it easier. And I think we sit in the correct place to do it. Like you say, Sam, accountants are the most trusted advisor. You look back, 15, 20 years ago, it would have been the bank manager, and the bank manager's pretty much disappeared. Who do they go to now? So it's really important that we are available for those sorts of conversations and to provide that kind of support.
Yeah, the last point you made was the point I was just going to make as well, that in the past they might have been able to go to their bank, but they can't do that anymore. Like you said, most relationship managers have disappeared. So you're shoved down a computer says yes or a computer says no route, and the computer says no, you're quite often left feeling like you're not good enough, or you're not a good business, and quite often you're not given a reason for being declined even. So there is a lot of support out there for SMEs. I truly believe that, but part of the problem is that it's so fragmented. So there's not, generally speaking, one place that a business can go to and get some sort of comfort that they're going to be getting the right option for them. And as technology, there's more innovation and technology improves out there, all that's happening is that businesses are shoved down a tech route almost wherever they go. And one of the things I'm probably most proud of at Swoop is that we aren't just a tech platform where we shove people down a tech journey and off they go. We genuinely do provide a person on the end of the phone to talk to SMEs, and I think they really need that. And quite often that conversation is alongside you guys, where they've got their trusted advisor, and then they've got their, I suppose we're playing the role of that bank manager, but bringing together the whole of the market and looking at savings that can be made and everything else all together in one place. And I think it's just one of those partnerships, relationships all together that just fits perfectly, in my opinion. Let's move on. just wondering, Georgie, whether you would like to bring something to life. Have you got any real world examples of how you've managed to support one of your clients successfully through funding or savings, or you talked about some of the angst that you felt coming from some of your clients. Like, have you managed to solve that and found light at the end of the tunnel for your clients? Not putting words into your mouth, but if you've got any examples, it'd be great to hear a couple.
I'll do a small one and a bigger one. So small one. So consulting firm with a small team. I think they've got maybe 6 at the last count. As is happening in many places at the moment, decisions being made by their customers on when to start projects keep getting pushed back. And they're in that very awkward position where their ongoing guaranteed work isn't quite enough to cover the payroll for the team that they've got. But if they let some of the team go, then if 1 or 2 of these projects where they've been told they're going to be signed, but it hasn't quite happened yet, if those then go ahead, then they won't be able to do the work. And they needed to have some form of short-term financing that would get them over that dip until the projects were confirmed and signed. And that's where Swoop stepped in. So I had a conversation with the business owner, and then that afternoon he had a conversation with one of your funding experts, Sam, and they discussed a couple of different options, looked at whether or not a long-term loan was appropriate, or whether it was something where they could dip into financing if required, but they weren't then stuck having to repay something over a long period, which wouldn't have worked quite as well for them, a long-term loan, because when these projects come off, they should then be able to pay back the funding. And within, I think, a further 24 hours, a line of credit was made available. And they've gone from sitting there in a panic going, I don't think we can make payroll this month, to knowing that they are going to be able to access the finance immediately, and knowing that they can retain their key employees, and push forwards and keep the business going. So that was a very quick and easy turnaround, but made a massive difference to that particular business owner's peace of mind, for sure.
Yeah, I think it's a great, just quickly, I think it's a great example of how quickly things can get turned around now in the current market, because there are so many different options out there, some of which can be put in place very quickly. I think quite often there's a perception that a funding application is going to take weeks, if not months, sometimes to get through. And don't get me wrong, there are certain cases where that will happen. But on the whole, we're in a very different funding landscape now compared to where we were in, for example, 2008, 2009, the previous financial crisis, where the funding landscape was completely driven by the high street banks. We're in such a different place now where there's a lot of innovation in funding. There's a huge alternative finance market out there. And it's those types of lenders that are coming into the market that are changing the way and making it a lot easier to get access to finance for those businesses that do need it.
Yeah.
Number 2.
So number 2, the bigger one, you'll be quite familiar with this one, Sam. So this is one of our favorite craft brewery clients, where we've been in conversation with them about their need for funding for quite a long time. Super nervous business owners who are quite anxious about the idea of entering into debt that includes some form of personal guarantee. They've recently had their first child, they've just moved house, they've put a phenomenal amount of money into the business to get it up and running. As a brewery, you invest very heavily in equipment, and they've basically bootstrapped it. And their only previous funding was a little bit to buy a van that was associated with the van, and a bounce back loan, and that was it. So we've been in conversation with them for quite some time, and although we'd previously with Swoop got something sorted out for them, they got cold feet because they were worried about the personal guarantee. In the meantime, their cash flows sort of gradually worsened because selling into pubs at the moment is not an easy business. So although they've actually managed to hold their revenue steady over the last year, they've increased their costs at the same time. So it's got tougher. Again, one of the Swoop funding experts has managed to find them access to financing that does not include a personal guarantee. And it's another one where they've got basically short-term support where they can dip in as needed. And this almost feels like a sort of gateway drug, that this helps them to get comfortable with the idea that financing is something that is going to help them to push their business forwards, rather than it being an evil where they're going to be paying off this horrible thing forever with no benefits. And they've got plenty of ability to access future financing because they've got this massive asset base that is unencumbered with debt at the moment. And I think once they kind of get more comfortable, they'll then be able to look at what their plans are to grow the business on to the next stage. They've got various things that they want to put in place, and to have a lot more confidence that they're doing the right thing, taking out debt to do that rather than trying to self-fund. And again, they've been super worried about everything, not sleeping at night, new baby, can't pay the VAT bill. And it feels like it's just taken a massive weight off.
I think it's another great example, Georgie, and it's a great example also of how important the re-education of clients is and the market is, because in some ways, so what's gone through with COVID, with the bounce back loans and the CBILS and the RLSs, in a way was great, and it was brilliant that people were able to gain access and getting that level of support when they really needed it. But in some ways, it was a false. It wasn't a real picture of what the finance landscape is actually going to be like moving forward, and we're now back into the world of personal guarantees, and you're not going to get finance at 2% anymore, because we're in a much more realistic, well, maybe a more realistic environment. Hopefully it comes down again at some point. It's a bit late for my own personal mortgage, which had to be done a couple of months ago, but that re-education piece needs to happen, because you can't get debt quite as cheaply, and quite often there's that personal guarantee. But debt isn't the spawn of all evil, and actually lots of the perception of debt and taking out debt being last resort, it's only for struggling businesses, is actually not the case. And a lot of businesses out there are using it as sensible working capital management, to reach their growth plans, to grow quicker, to take advantage of maybe their competitors not doing so well. There's lots of reasons why debt is actually, or can be, a force for good if used responsibly. But sometimes, yeah, I completely see the human element of that. It's a big leap, isn't it? Especially if in our personal lives we do see debt as a bad thing. Typically, it's hard not to think like that from a business perspective.
Yeah.
Thank you for your examples. I just wanted to give a couple of real world examples of how we've some of the success stories that we've had with couple of accounting firms. I won't run them into too much detail, but just wanted to bring up Freshwater Accounting, who are an ICAEW firm based down in Sutton. When I first met them, I met them in a coffee queue at Accountex, and actually when I first spoke to them about it, they weren't that keen on it, because they thought they didn't really get all that many funding questions. They weren't getting that many questions from clients. Every so often when they did, they would just chuck it to their usual connections in various different banks or with various different lenders. With a little bit of persistence, when we did get started, and what Swoop has been able to provide them is a trusted solution that not only can they deal with when clients are coming to them, so that's from a reactive perspective, but when they're very close to their clients, they speak to them very often. And what it's just doing is giving them that confidence to spot opportunities themselves. And they're it's probably laws of attraction, but they're hearing different things when they're chatting to their clients and jumping on them with the opportunities behind them. So within the first 6 months, I think we'd done 15 deals, 15 successfully funded deals with their clients, and we've now more than doubled that in the sort of year to 18 months that we've been with them. So it's just, we're a very key part of their business, and we absolutely love working with them now. And it's just because they do have that nice close relationship with their clients, and they bring us in when they need that higher level of support around funding. The other one, just quickly, is with Gravitate, who most people probably have heard of these days. They are very active on social media, and their growth since they started, I think it started at the beginning of COVID, so they've only been going about 4 years, has been absolutely astronomical. And their whole premise has been around providing advisory first to their clients. So it was advisory first, compliance is the given, and they've right from the get-go seen funding as being a key part of that. And we've taken them on a journey as well. And one of the things I really like about the relationship with Gravitate is, yes, it started with what I would call the project sponsors. So Sam and Mike, we started with them, and they were the ones that spotted the opportunity, built the trust within the business. But now we're working with the whole team. So we've done plenty of face-to-face training, and we've built the confidence and the knowledge of all of the team. So they're all equipped and confident to be able to have conversations to spot opportunities within their client base. So for me, they're almost the perfect case study of how we work with them. We don't just stay with the business owner and focus there. I'm probably most passionate actually about working with the younger accountants coming through, because I recognize it's probably not enough for a young accountant just to be a number cruncher these days, putting together the numbers. They need to be learning those human skills and learning how to interpret the financial information themselves. So I genuinely love working with all accountants in the firm, not just the business owners, and Gravitate a great example of that. Moving on. I did promise Roz that I was going to say this right at the beginning, but I'm not going to do a platform demo today because I knew it would take up too much time. So I will talk a little bit about the platform, but I'm not going to be doing a demo today. If you would like a demo and like to see how the platform works behind the scenes, then if you're techie enough, get your phone out and you can scan that, scan the QR code to book in a demo call. And we can show off the platform and how it works. Part of the reason I didn't want to do it today is because there is so much we can help with. It probably would have taken up the whole time to show you absolutely everything, and you'll be more interested in different parts of it. So didn't want to assume you wanted to see the grants piece and then this piece and then this piece. So I'd rather you guys all had your bespoke demo and showcase of the platform, so we can do that another time. Sorry if that's disappointing to anyone. But in terms of other tools for success, so if you were to partner with us, you do get access to the funding platform. Like I said, we're a funding platform, but with funding expertise and experts behind the scenes. There's a couple of different ways you can do that. So you can have access to a back-end platform where you upload your clients and their details, as in their funding requirements and what they're looking for. I then assign that to the most relevant funding expert at Swoop, of which we have 30 or 40 different specialists in their various different areas, and then they pick it up with you first. They'll always deal with you first, and at the point where you give us permission to speak to your clients directly, then we take it on with the clients. The alternative, and it's one that quite a few of our accounting firms are using with us now, is the white label option, and that's where you actually have for example, a Starfish accounting powered by Swoop white label. Where this is quite a nice little tool is it forms a really nice, easy call to action in your marketing or on your website. And what that does is save you a ton of time. You're not the one that's always having to kick off the funding requirement yourselves. You can get the clients to self-service. If you are doing the communication and sending out marketing material, there's a very clear call to action that isn't booking a meeting with me or send me an email and we'll get something sorted. So from a time-saving element, it's brilliant. And it's a much cleaner client experience and client journey, and they can choose the sorts of Swoop products, if you like, that they feel they're most interested in, rather than it being reliant upon you to have that conversation at each point and go down each one every single time. So huge time saving, really nice, slick process, and yeah, they look great as well. The next bit, I'm not going to dwell on this because we've already talked a bit about education, but the other tools that we give you are the education, so CPD accredited, but we also do individual bespoke masterclasses for you and your firm. So again, we don't want to assume that you want to just focus on unsecured and then equity. We will take you through what you most want to learn about, where you feel like you've got the biggest gaps, or where you feel like the particular product has the most relatability to your client base, and where you feel like you're going to get the most traction first. And we'll do those bespoke, so you're not there with other accounting firms, so you can speak freely about and feel confident you can ask any questions you want of our experts. and we can get into much more detail as to what your clients are needing and what they're looking for, and we can talk you through the various different options that are out there. Finally, we do have marketing support. So again, we're just trying to put together a whole package and process to make it as easy as possible for you guys to launch this as a service. Again, I know from being in practice that you can sign up to these things, but you need someone to help you to do it. Like I said, we're all firefighting. We've all got lots of things going on in our day-to-day. If we can make it as easy for you and remove any friction for getting started and just providing this support to your clients, then we're going to do that. And I genuinely mean this, and Georgie is not always the best at this, but I always say to our partners, our best partners are the ones that are most needy and most demanding. So please ask, engage, ask as many questions as you want, and demand a lot, because we have a lot of love to give. You probably agree with that last bit, Georgie, at least.
Absolutely.
Cool. The next bit that I promised we'd talk about is how you could build a lucrative revenue stream. Now there's a few different parts to this, which I'll go through on this slide. But Georgie, was the potential of a new revenue stream, was that something that was important to you when considering funding and starting to talk to your clients about funding, or was it just a Brucey bonus?
It helps. That wasn't why we were looking for it. I think we knew there was a need, and we wanted to make sure that we were there when our clients needed it, basically. But having some commission off the back of it is quite helpful. Although obviously, as an ICAEW member firm, we have to be super careful with how we handle that commission. Yes,
and not everyone is happy with commission, or they feel like commission is a bit of a dirty word. Is that something you've had to get yourself around, or is it just making sure that you're clear with the ICAEW guidelines and making sure you're ticking the boxes so that you can feel comfortable doing it?
We've sort of got two main views on that in different scenarios. One is that, and this is whether we're referring stuff to Swoop or to an R&D expert or whatever it might be, we don't charge extra for our help to pull together and liaise, so we feel that the commission that comes back or the kickback or whatever it is basically instead of us charging for the client for that. So we will go to the client and say, we have received this, we have not charged you for that. Let us know if you've got any concerns with that. We have had, one through Swoop where the client was in the process of looking at a funding circle loan, and then they switched to doing it through Swoop, and we landed commission and we'd done almost nothing for that. And I felt it wasn't ethically correct for us to retain that commission. So I went to the client, said, just so as you know, because you went through this platform, we then got some money from it, and it doesn't feel like this really ought to sit with us. So we agreed that we would retain the money, but we would provide advisory services until that money had been fully utilised. So we effectively used that as a credit against services.
Nice.
And he liked that approach, and it helped us to, in fact, suck him in to ongoing advisory work. So it had its benefit there anyway. But yeah, it does depend on the scenario.
I think it's a really great way of doing it, and you're not alone in that. There are quite a few different ways that people deal with commission. Some people just point blank don't want to touch it, so they'll take not only ICAEW's legislation, regulation around it, so they'll take that to the finer details, but also any ethical code. Because obviously ICAEW, we've got our ethical code as well that we have to abide by, and they will take the conflict of interest one in particular to be very seriously, and they just don't even want to be questioned on it, so they'll just say no to commission. But like you said, if you're not charging for your time with the funding application, then commission, like you just said, Georgie, is payment for your time, really. What some firms that we work with do is also charge for funding, so they'll charge a straight 250 quid or 750 quid or somewhere in between, and what that does is stops the tire kickers, if you like. It stops just those that are not necessarily all that interested, but just wanting to see what's out there, and they've probably got no intention really of actually taking out any finance. So it it whistles down those that are actually serious about taking up your time and looking at this versus those that are just seeing what's out there. What those, generally speaking, those that do charge for funding do is, if they do successfully get funding, is they reimburse that, or they reimburse that part of the pricing, so they're not then taking the commission on, or over and above the commission on top of that, they're reimbursing a part of it. The other one that is nice, what you said, is using it as like advisory credits or a credit for their services. So I love the idea of the advisory credits, because what it does do, like has happened in that scenario, Georgie, is get them to understand the value of your other advisory services, and like you said, hook them in, suck them in, and make them realize that they should have been doing it all along, probably, but haven't necessarily been had the confidence necessarily to get started before. And then the final thing that a couple of our firms do is don't take the commission and put it in their bank. They actually it goes straight to their charity of choice, so their charity of the year, or we've got one who puts it into ecology and grows trees because he's very into his sustainability. And I think, again, that's a really nice way of doing it and supporting some of the other initiatives you might have in the firm. So it's not all about commission, but commission is nice. I don't think it's a dirty word. I'd probably be taking it if I was still in practice, because ultimately it is remuneration for the value that you guys are adding to the conversation. So why shouldn't you? It doesn't have to make you impartial, etc. The other benefits, obviously, of funding are the obvious added value to your client, both from a business perspective, but also, Georgie, like you said, from a business owner perspective and how they're feeling. And it can be life-changing sometimes, and I don't think that's too glamorized to say that. It can be absolutely life-changing for the business to support them and be alongside them for this. It can raise your profile, differentiates you from other accounting firms sometimes. So if you're out there in the market looking for new business, I mean, how great would it be if, as part of your onboarding process or your proposal process, you're also letting them know what sorts of grants are available. You're asking them to look at what savings could be made in their business. For me, that's a massive point of difference than just talking about accounts and tax and bookkeeping, which you all do. Let's face it. Okay, you all do it of various different quality, but you all do it. So what can you do that can help you to stand out in that proposal process or when you're out there in the market? And then the final one is selling more of your services. So quite often with funding applications, cash flow forecasts might be needed, or management information might be needed, and you might have struggled to sell those or sell the value of those in the past. Well, this is a great opportunity to do that. So if you're struggling to scale your advisory services, or you just want to do more of it, I genuinely do believe that funding can be a gateway for doing more of those and for getting closer to your clients, stickier relationships, and increasing that average fee per client. I'm assuming you're nodding, Georgie, because you agree.
Definitely nodding because I agree, and we've got real life, situations where clients who know that they need additional information to produce for funding applications are then engaging us to do management accounts, where we've been trying desperately to sell the management accounts with no success for many years. So yeah, that's quite a nice in. And it definitely makes the relationship more sticky, because if we're the ones who have helped them to get through a rough patch, I appreciate no clients are ever going to end up going to your funeral, but it does add a bit of extra loyalty there, which is quite handy when there's a lot of competition out there on price that we try and avoid.
Agreed. I'm just conscious of time. I think we're in our final 10 minutes. Please do ask any questions, guys. If you've got any questions, and please do. Don't be shy. We don't really have a flow, as you can probably see. We're just all over the place, but so please do ask a question. I'm not going to go into this one in too much detail, but just this slide just demonstrates that actually there's a lot of different options at the different stages of life cycles for businesses. So, there's a lot of assumptions sometimes that startups can't really get access to funding, and that's not necessarily true. Okay, there might be fewer options. An element, 3 years trading history sometimes can open up a whole load more options. But startup loans, the interest rate on a startup loan hasn't changed in line with the rest of the increases in interest rate. Startup loan is still 6%. It's probably the cheapest loan on the market these days. And also the rules around access to a startup loan changed in that you can still get access if you've been trading for 3 years or less, and it used to be 2 years. So very easily accessible. You just need a basic cash flow forecast and business plan, and quite easy to get set up. But there's also a lot more flexible stuff in the startup stage. So asset finance, because the finance is secured against an asset, the trading history is less important as long as you can cover the show that you can cover the monthly repayments. And then there's lots of innovation around revenue type finance, where as long as you've got 2 or 3 months of trading history, you can actually trade against the revenue rather than the bottom line. So they're various different options. And it's if you do have clients that want that little leap and push into getting started, then don't assume there's nothing there for them. And obviously there might be grants as well. And worth just touching upon how we work on the grants perspective, because accountants get very excited by grants. And I think part of the reason they get so excited is because it's such a pig of a landscape to navigate yourself, and can take a lot of time. It changes very quickly. We've got a full-time resource of people keeping our grant finding tool up to date. So we broadly split grants into 2. So you've got your local and regional grants, and you've got your national innovation type grants. The local regional ones is a signposting service, but massively powerful. So based on the client's industry and location, it will come up with a relatively long list of grants that might be available to those clients. If you think about embedding that into your processes at onboarding or in your quarterly meetings or pre-year-end meetings, just proactively looking at what grants might be available, your clients are going to love you forever. And they just see grants as free money. Okay, it's not quite like that in reality, but just another nice, easy added value thing that you can add to your bow. I won't, like I said, I won't go into too much detail, but I just wanted to show you where have I put it? Here. This is just an overview of absolutely everything that Swoop can do to support your clients, and it is vast. And that's why I wanted to dwell more actually on the service and how we support you than just the products, because if you were to partner with us and I was going to chuck this toolkit at you, you're probably not going to know where to start, because there is so much. So that's why we work so closely with you, to help you to navigate, to help you to know where the low-hanging fruit is in your client base. And that's where we work with you quite closely. But we split our product offering into 4. So you've got loans. We definitely don't call them debt, because debt's a bad word. We call them loans or borrowing. And that's everything from asset finance to VAT, HMRC funding to startup loans, corporate acquisition funding. So anything from startup loans up to 10 million and beyond. We've got funding experts that can do it. So they've got 5, 10, 20, 15, 20 years of experience in banks and brokerages. It's not just a tech platform. We've got proper people behind the scenes. On the grant side, I just mentioned, so local and regional, your innovation ones. For the innovation ones, we have a panel of grant writing partners that support the applications, make them much more likely for the business to be accepted. On the savings side, we've got current account switching, we've got insurance, energy switching, credit score, credit improvement. We've got deposit savings accounts for those that are fortunate enough to be sat on lots of cash at the moment. Then we can do something with that and make that cash work a little bit harder for them. And then FX and international payments as well. So if you've got clients who are transacting abroad on the regular basis, then it's probably worth looking at how they're making those payments and whether there's anything that could be saved from an FX perspective. I believe we just had a question.
We did, Sam. I think the slide might have answered it, but Fozia, very nice to see you on the call. Apologies, missed the first part. I have a client who's jumping through hoops to get their bank to get some funding for investment. Do you go to typical lenders or get the loan from something like crowdfunding?
Interesting question. So we have a whole of market offering. So I think we've got, which is a bit of a vanity statement, but what that basically means is we've got about 300 different lenders on the platform. So when we receive the information about the funding requirement, our funding experts will consider, based upon the financial statements that they've received, and the funding requirement and the trading history, blah blah blah, we'll go out to the lenders that we think there's the best chance that the business will be successful with. So we help to navigate jumping through those hoops on behalf of your client. We're the ones that we can do that for them up to a point. So there's sort of two parts to your question here, I think. There's one that's focused around banks and their lending, and there's another that's focused around equity investment. So crowdfunding is something that's a little bit different. That's not something that your banks would necessarily be providing. That's a separate part that falls under our equity offering, and we do have relationships with, I think there are 3 main crowdfunding platforms. We do have relationships with those, so potentially can support those, but two different types of questions there, I think. Equity investment, we can support with that. Just to give you a bit of an idea of where we are in the equity investment world, I think it's 40% down across Europe. So it's harder than ever for businesses to get equity investment of various different types. That's not to say it's impossible. It's just a bit more of a numbers game than it ever has been before. A large part of what we do is in the SEIS and EIS funding range, and we do advanced assurance and all those sorts of things. Obviously, we've just missed the deadline now. So there was lots of activity up to the 5th of April. Most investors who are part of that scheme have now emptied their pockets probably, and will be refilling those ready for the sort of same time next year. So yeah, there is another option there on the equity side, but it is more challenging probably than ever has been before. No more questions, Roz?
I have one, if that's okay. Just, are you limited to the UK in terms of your funding sourcing, or have you got a little bit more global reach?
That is a very good question. So Swoop's whole premise is that it wants to break down the barriers for funding globally. So we started off in Ireland and then very quickly moved into the UK. And we're now in Australia, South Africa, Canada, the US, and Ireland. And we're basically the plan is for global domination at some point, but those are the main ones. We've also done funding in other countries where we don't necessarily have a permanent base and boots on the ground. So absolutely, and we do this quite often where we'll be working with a UK accountant as well, who obviously has clients that might have an entity in Australia or an entity in US. There might be a group that has entities all over the place. The really nice thing about it is that we can actually potentially provide options for finance in multiple different countries at the same time. I think there's something quite unique about that, to go through one platform or one team and be able to get options across the world, across the globe. So yes, it's one of those. We're in about sort of 6-7 countries already. The plan is to go further. And yeah, there's probably no stopping us.
Fantastic. Thank you, Sam.
No problem. I will start to wrap up now. What I will share with you guys, anyone who's interested, is there's a sort of a 5-step funding playbook, which I really quickly showed you, but not really, which just shows you how to get started and asks you a few questions about, if you are to get started, what sort of service you're actually wanting to provide. Is it a reactive or is it a proactive service? How much do you actually want to get involved? And then a few sort of tips and tricks for getting started. And then obviously, if you would like to find out more and have a nice chat with me and my team, then you can book in a call, or just pop me an email, or give me a ring, and I can just talk you through how we work with accountants.
Fantastic. Thank you so much, Sam. We also have another webinar with Swoop coming up later this year, talking more about those government and local grants and funds. So that brings us to the end of the webinar. Thank you so much, Sam and Georgie, for your insights and advice. Thank you also to our viewers for your time and your questions today. I hope you found the session useful. A short feedback survey is going to pop up onto your screen as soon as the webinar finishes. Please do take a minute just to fill that out. It helps Swoop and us know whether or not this has resonated with you and helps us shape our future topics for you. The webinar has been recorded. You will receive a copy of that in a follow-up email in the next 24 hours. Other than that, have a fantastic day. Thank you again, Georgie and Sam.
Thank you, guys.
Bye.